Welcome back everyone to Mad Max Crypto, and in today's episode of technical analysis and chart patterns, we're going to be talking about Bitcoin in the local perspective on the daily time frame. There is literally a ton of information to go through in these charts, and don't forget to subscribe and watch this video until the very end so you know exactly what's going on and where we're going as far as price of Bitcoin within next 3 to 5 days. So before we start, real quick, I wanted to mention that everything in this video is not financial advice and you should do your own research. First of all, I wanted to point out on stochastic RSI, and basically what we can see here is that we've been going on a slight correction from November 14th until now. Basically, it's not one of the super important indicators to look at. However, this could give us a clue on where the price action will go next. Looking at this stochastic RSI, we can see oversold region is basically giving us a clue that at some point we can see some price action on Bitcoin. We can say that stochastic could either bounce off the 50 horizontal line and go back down immediately, getting rejected. That way the price of Bitcoin will definitely have some corrective move, but also it could go up all the way until overbought region, and that way it will create a huge bearish divergence. And we can see right now that momentum is towards the upside, towards the overbought region. However, the 50 horizontal line could be a huge resistance zone for it. So here on the MACD, and by the way, MACD is one of the most important indicators in the tool belt of trader, and we can see that selling momentum is slowing down, and it kind of gives us a clue that the momentum will turn to kind of a bullish perspective for at least a short period of time. And if we combine these two indicators, the stochastic and MACD, we can tell that the price action will be towards the bullish side, which gives us a clue that the price could reach up to $39,000 to $40,000 region in the short term. This will also give us a sign that bearish divergence is occurring. And to spot bearish divergence, we should also look at other time frames, for example 2-day time frame. And I wanted to show you guys real quick what's happening here on two-day time frame. We can see that stochastic is still kind of weak, and it will probably go to the oversold region relatively soon, I'd say, which will give us a clue that bearish divergence is still in play. And once we see the stochastic turn around and go towards the overbought region, and the MACD will be turning around and giving us I wanted to say, it will give us like a little knob right here, and the histogram will start to rise, and that's gonna be the moment of bearish divergence in play, and that's where we're gonna be seeing the turnaround point for the price action. And to do all that, I believe that price will reach somewhere from $40,000 to maybe $42,000 region, which is right here. That will be a strong signal of bearish divergence in place, and we can see a relatively strong pullback within the next couple days to a week. And more likely we can expect pullback towards the $34.8 thousand area, which will be, believe it or not, a very healthy pullback, considering that we have higher lows and higher highs from basically October 24th. We do need to see some kind of correction because this move is already exhausting, and only time will show how far of the pullback we'll get. It's either going to be somewhere in $35,000 and $34,000 region, or somewhere even lower than that, down to $32,000 region, which in my opinion is pretty reasonable, considering that we had an uptrend since January of this year. So in conclusion, I can see the short-term long in the coming days, let's say 3 to 5 days from now, which will take us to the $39,000 to $40,000 region, and that will finish the bearish divergence on the MACD and RSI. Then we can expect the pullback in the $35,000 to $34,000 region at least. And depending on how strong the bears will be, we could also see the corrective move all the way down to 32, 31.8 region, which is still healthy. We still need that before we climb up higher. Also, I wanted to point out on the volume that's coming in, and I wanted to draw, well, first of all, I wanted to point out that it's not ready to go on the corrective move yet, as we see the moving average is kind of turning around and looking like they wanted to show us some more buying pressure coming in. However, we need to look closely and make sure that volume that's coming in will not beat the prior highs, which is right here. So in the next couple days, because this is a daily time frame, right? If we see something like this volume coming in, and it will not go above these highs right here, but the price will actually make new high, that will indicate that strong bearish diversion is in place, and the price will find the pullback in the at least $38,000 region. So this is going to be one of the things to look out for the next couple of days. Another thing I wanted to point out is that we have a rising wedge forming possibly right now, in my opinion. So if we take into account that the bearish divergence will still be intact, and we will see the price kind of spike out and create a fake out basically, and we'll go right back down, more likely than not we will see the breakout of this wedge with some kind of a retest, I believe, and then we'll go straight down to $35,000 in my opinion. And then we'll see how this situation will unfold, and if we will have any continuation towards the downside or not. Also, I wanted to point out on the Moneyflow, and if we take a look at this November 10th high, price was going up and up and up since Moneyflow was going down. Another thing to look for is the Moneyflow that was going from January this year. We haven't beat those heights yet, and I'm not very confident that we will in the near future. The only thing that I can suggest keeping your eye on is if we make this correction after we form the bearish divergence, if we see the corrections on the Moneyflow, and then it will start to turn around. So we need to pay really close attention to this Moneyflow and see how it's gonna behave in the next couple of days to a week. And I just wanted to point out on how it was back in August, September last year, and how the highs was forming. But after that, we kind of had a pullback on the Moneyflow, formed the divergence. So it's pretty much going to be the same situation right here. We kind of formed all the higher highs and higher lows on the Moneyflow, and after this pullback, we could form a lower high on the Moneyflow, which will lead to the strong pullback. And just to see how that was on the price chart. Let's see. So the December high right here, it's hard to see with so many indicators on here. So just to see on the perspective September 2021. We were forming higher high, then another higher high, and price was basically climbing up as it does right now. And on the Moneyflow, we were forming highs and higher highs, another higher high, and after we had a small pullback, which lead to another higher high on the price, but the Moneyflow and did not beat the previous highs, which lead into a, what is that, 22% correction, 23% correction, however you want to call it. So we should expect something like this happen again. That's why I said we should pay really close attention to the money flow and divergence that that is forming at the moment. And so to put it together with the price action we have right now, we are doing pretty much the same thing. We are forming higher highs, right? And the money flow is forming highs as well, but right now we are having a pullback, which could lead to another higher high on the price. And like we talked about earlier, it could be somewhere $39,000-$40,000 region, but the money flow will not beat the previous highs, as well as the squeeze momentum here. It will only go, for example, like halfway of this histogram right here, which will indicate of the strong bearish divergence. And in this case, we can expect some kind of pullback, $35,000 region, and then we'll have to see how the situation is unfolding from there. So in the conclusion, I wanted to point out that all this bullish scenario that happened over the course of couple months, right, from September until basically December. It's going to be December in a couple of days. All this bearish scenario that we had within this month will 100% lead us to the some kind of a pullback or a bearish price action, and how far down will we go will dictate on how much volume is coming in, how much selling pressure is coming in, and it's kind of hard thing to predict at the moment. But as the situation is unfolding, we will see more data coming in, and then we can evaluate how far the price will go down. Another thing I wanted to show you is this chart right here with 30 simple moving average on a weekly time frame. What I wanted to show you guys is how well it played its role when it comes to resistance and support. So, and every time we come to it, we either find support or we find resistance. And right now we obviously very far above this line, and if I wanted to guess and see where the pullback could be, I would say somewhere in this region right here, 35.8 or something. By the time the bearish divergence, as we talked earlier, will play out and we see some kind of pullback and the price will come down to see this $35,000 area, this 30 SMA will more likely come down to this region right here. And I wanted to say that after that $35,000 area, if we're not going to see any strong signs of reversal to the upside, then I would assume it will have to hit the 30 SMA on the weekly time frame, which correlates perfectly with the $32,000 area, 31.8, something like that. So my guess for the worst case scenario of this pullback, what we can see is $32,000 area. Another interesting metric I wanted to show you guys is long and short liquidations. So what we can see here is that short liquidations are more likely will be hit, which will lead to basically what's the short liquidations means. It means that everybody that shorted the market and the price went against them will have to buy back their positions. So buying back positions will push the price up, and so far we see that it can go up to almost $38,000. It's going to be like 37,900, something like that, which will again complete our bearish divergence that we spotted on the charts, and that will possibly lead to some kind of corrective price movement, unless we see the money coming in and whales will push the price up to $40,000. Then we'll have to evaluate the situation from there. This liquidation map is by no means strong indicator of any kind, but it's one of those things that interesting to keep our eye on, because a lot of times it can correlate with what we spotted on the charts. Alright, so this will wrap up the video for today. If you like the content, please hit the like and subscribe button. Share this video with your friends and family, and hopefully the future content will help others to become better traders. Thank you for watching, and I will see you in the next video. Bye bye.